2024 presents a unique landscape for investors, according to Howard Marks, the co-chairman of Oaktree Capital Management. With a history of ultra-low interest rates ending, he believes the golden era of easy money, which boosted the economy and asset prices while encouraging risk-taking, has passed. He notes that interest rates, while higher than in the past 2 decades, are relatively low historically. In fact, the federal funds rate, which was around 5.25 to 5.5% in 2024, is similar to the normal rates of 3% to 8% seen from 1990 to 2000. Marks points out that the current financial environment is unlikely to return to the ultra-low rates we've become accustomed to due to factors like deglobalization, a proactive approach from the Fed to prevent inflation, and the need to avoid economic imbalances. His forecast suggests market consensus believes inflation will align with the Fed's 2% target, possibly leading to minor recessions but avoiding a significant economic downturn, allowing for lower interest rates in the future. Howard Marks advises investors to pivot from past strategies due to changing market dynamics. He notes the U.S. stock market is slightly overvalued but not critically. Marks sees more excellent opportunities in the debt market, offering equitable returns with lower risk. Ready to explore the world of investing? Start now with a commission-free trading platform. Open your free account and get up to 15 free stocks worth $2,000. Plus, earn 5.1% APY on uninvested cash. Click the link in the description to begin your journey. Remember to subscribe and stay updated for more insights.